Good evening, everybody. 66. Good fun car on a summer evening. Okay. All right. In the good old days, before candlesticks came along, today would have been a miserable day for me. But now when candlesticks came along, then we can see up here is when we started deciding to close out long positions and maybe adding a few short positions. So as we're heading down here, instead of being excruciatingly pained, it's now where we're happy. And before, if I was long, hoping for the turnaround, I didn't have any capital to take advantage of this price move or what could be a blow off to the downside. Now, being short, I know that if I see a big blow off, I take profits on the short, and that frees up capital to start going long on positions that are probably getting just obliterated. And so these are the type of days or type of market conditions where you can make a bundle in a matter of hours. And I say bundle, 20, 30, 40% on stocks that you can pick up at $9, and by the end of the day you're selling them for $13 or $7 or something, $12.70, something where you got some big, huge profits. And what had been holding up well prior to today was the NASDAQ. But as we can see in today's trading, the T-line was now doing a T-line crunch, pushing us back down through the support level. That means there could still be a big blow-off day. Now, I say a blow-off day. A blow-off day to me is when you're in the oversold condition and they just obliterate everything, blowing everything out, and that's where you flip to your 10-minute chart, which I've done many times, not many times, but a few times in the past. You see a big down day. First hour of trading, it's down 280 points, meaning 575 points in 2 days. That'd be the Dow. Let's say they knock the NASDAQ down another 100 points. Then what you do is you flip your 10-minute chart and you see if it starts leveling out. And when they start coming back, you want to jump in because that means they're going to bring it back up with a vengeance. Because anything that moves that far away from the T-line, we have a very simple rule. They'll probably pop it back up and test the T-line. And sometimes on these big, huge sell-off days, that could all be in one day because people just don't stop buying when the buying comes in. So the good part about days like this is that we still have chart patterns that are working well. Our TKMR was acting well. So having a candlestick trading forum like we do puts us in situations where there's so many eyes out there looking at stock situations. Well, this one was acting well earlier in the day. But there's still chart patterns that if you start seeing some strength, IDRA, they couldn't even close this back below the T-line, not a sell signal, but coming off a strong buy signal and telling us we're in wave 3, we can be prepared to be buying something like this once the market turns. Tazar is another example. Kicker type signal, back up above the T-line and the 50. If this opens positive tomorrow, you want to be buying immediately. WPCS is another slow curve, very low price stock. And I don't know what I was thinking. I then jumped right into the stocks. That's because I forgot to write down all the things that might be influencing the market. So we'll take a break here and take a look at crude oil prices. Crude oil prices, if you look at the longer term chart, is still in this slow, steady downtrend. Might be time to short crude oil again because they could bring it back down to the bottom of the trend channel, back down into the $91 area. The dollar just can't get going. It's moving sideways. The euro in a slow downtrend, probably now ready to pop back up to the top of the trend. So a lot of these currencies right now just are not anything that you really want to be trading. Now the Japanese yen, when it finally bottomed out, it's staying above the T-line. I would suspect your first target is going to be up here at the 200-day moving average. And the British pound is just getting obliterated. This one looks like it's trying to even break this downtrending channel. That could mean they're knocking the British pound all the way back down to the 200. Interest rates, notice how the bond prices, this is the 10-year notes, had no problems going through the resistance level at the 200-day moving average. That tells me that there's more upside. Even if they take it up and bring it back, they're probably going to see if the 200-day moving average is now going to act as support. Gold. Gold just is not anything that I'd be trading right now because there's really no great movement in it. Silver, same scenario. It's just kind of waffling in here. So there's nothing in gold or silver that would get me real excited. Let's see. Soybeans, probably moving back up to the top of the trend channel. Notice the double bottom. I'm trying to find anything, and I've stayed away from trading any of the commodities here recently. Wheat has an interesting little chart here. That might be a little morning star signal. Corn, starting its slow uptrend. See if lean hogs, I wouldn't be trading this one either. Nothing showing long or short. Looks like they're taking cattle down hard and feeder cattle. That's not in anything that you'd want to be trading with any great enthusiasm. Natural gas getting hit, but they've backed off the spike. But notice where they didn't close it. They didn't close it below the T-line, so you might want to watch for a J-hook type pattern. And copper, that's going straight south ever since the little kicker type signal at the T-line. Stay short until you see a buy signal. Okay. I think I hit all the commodities that we could think of. Sugar has a good looking little chart. Probably coming back up to the 50. Cocoa in a slow uptrend, but right now it needs a breakout. And coffee, ooh, didn't notice coffee. Notice what coffee bounced off the 50. This time went right through the 200. That would have been a nice trade. Where was I? We did silver. Silver's just kind of moving sideways. I wouldn't be long or short the metals right now. Okay, back to stocks. There's still some stocks that are showing some resilience. Overstock, that apparently wasn't one that was showing resilience. Oh, this was one that we were looking at on the short side because of the kicker signal to the downside. And BTSS, ever since the belt hold bullish engulfing signal J-hook pattern, this one you want to get ready to buy on positive trading tomorrow. Another one that gapped up today was BEAT. There's your left-right combo, gap up. This one's going to have more upside. This is going to bring back up into the $11, $12 area. Okay. That's right. I was off drinking coffee when coffee moved. And SAND, this one it was setting up for a little J-hook pattern. I'd put a buy stop right here. If it comes back up through this, I make this as small as we can. That's an idea. If it comes back up through today's high, pretty much likely move back up to the 200-day moving average. NWBO, another one that if this opens positive, does a doji sandwich out of this area, you've got your J-hook pattern in progress. More upside. And HZNP, another one that's got a J-hook type pattern set up ever since they gapped it up. I would suspect they're going to bring it back to the top of the trend channel again. So you got some upside there. Now, any of these upside is going to be fighting the trend. END, that's a nice little J-hook pattern setup. If this opens positive tomorrow, you could be buying this one. But the ones that you really want to start going after or should be involved with are some of these shorts. KKD, we had some of that short position ever since this dumpling top, and then they gapped it down. This one you stay short until you see a buy signal, and with it gapping down kind of through the support area in here, this was wave 1. Wave 3 could take you all the way down to about the $10 area. Another one that we got out of, and this is the exact reason why you close out a position if it closes below the T-line. You had a left-right combo, a gap down, close below the T-line on Friday. Just close out the position because that tells you the probabilities are pretty strong you're heading in this direction versus going in this direction. So anytime I see that close below the T-line in a significant close, I close out the position. The worst case scenario is they pop it back up. Now you've got a completely different chart. You're back above the T-line. You can always buy back in. And HGG, that same scenario where you had the slow curve. Now you have a doji sandwich to the downside. That tells me there's still more downside, that if this is wave 1, wave 3 still got another couple points to the downside. And TXTR, you want to notice that a lot of these that's kind of a flutter kicker to the downside. And where did it fail? At the 50-day moving average. Where's our next likely target? Same magnitude as this, which means your first target is right here. That's a 10% move, and then possibly a lot stronger from there. And SDT, gap down. Anytime you see this gap down, that tells you, especially after a doji, that means there's a lot of force and your stochastic still heading down. TXTR, a blue ice failure? It could be. Let's take a gander at where the 200 is. Ooh. Maybe we don't have the 200 on here. Add a study. Moving average. Add. Apply. Okay. So where did the 200 go? Well, that ain't a fine howdy do. All right. See if we've got another chart that has that. That could be considered a blue ice failure at best. It's coming back down here to test the lower trend channel. UNTD. Well, we do have a 200-day moving average. And let's see if we can make this bigger. Oops, went way too far on that one, didn't I? But again, the slow curve, doji sandwich to the downside, wave 1, wave 2, wave 3 should be 7 points. Takes you almost down into the $5 range. And ENPH. ENPH is one of these that should be over in another category, which is it's moved down so much that if they smash this tomorrow, you want to be ready to buy this at much lower prices. And let me go through a couple more here, and then we'll get to some of those. ICLD, which was one that was acting well until they gapped it down. This one should have been closed out when it came back below the T line. Now notice the failure. If they open this lower, lots of possibilities coming down to the next support level, which would probably be somewhere in this range. So there's some good downside left to this one. And FONR. There's that bearish J-hook pattern setup, failing at the T line, meaning if they could move it this move, that means there's your target. And why does that become a target? Because that's where obviously everybody else that's where everybody else is anticipating it's going to be. So this one can be shorted on weakness tomorrow. All right, but the ones that we really want to look for is if we anticipate that they are just crashing this market, just blowing it off, and you have a big down day tomorrow, that means the stocks that have been weak are going to be just being crunched. They're going to be bailing out. So what you want to do is if you want to see if, especially if they gap down the stocks and or the markets, if they start selling off real heavy early in the morning, get your 10-minute chart out and then start watching to see when the buyers come back in. Because if they gap it down, where do most people sell? They panic sell in the oversold condition. And I am very adamant about this because I experienced it many times myself. And I see them gapping down, and I say, just get me out of this. And I'd be one of the ones that was selling at the bottom. Now I'm watching for what normal human nature does is the panic selling, and then when the panic selling stops and they start bringing it back up, the panic buying starts in very rapidly. So NOXXONE. Notice how this one's moved from 67 down to 44. And just rolling over, I'm watching to see if this one doesn't get some big selling. Because where do most people sell? Again, they just bail out when they get, they keep saying, where's this going to? There might not be a bottom. And they just, I expect a gap up open tomorrow and then sell off. Well, that's what we'll have to see is what they do with this market tomorrow. Another rollover. But if they start crunching this one, this is where you can pick up that 10, 20, 30% on a reversal and that's why I'm looking for the gap down. If they gap things down, that's usually the exhaustion. Whoops, what did I do here? S.HSC. Something like this, where notice where they're starting to sell or where they're selling big at the bottom of this sell-off. So if they start crunching this, these are not unusual situations to see a stock close at 23.5 or thereabouts and be down another 15, 20% the next day, where there's nothing. You'll see it. You'll see where every tick is just getting slaughtered. And it's usually stops that are getting hit. And they just whip it down. You want to watch that 10-minute chart. Catching the falling knife is much easier by watching to see when the buying comes in. And the reason I'm hoping for this type of day is I've made probably my biggest money over the last, how many years? I don't even want to mention the number of years where they just crunched the market, gapped it down in the morning, sold it off 300-400 points, and then all of a sudden you see it churning around and they start bringing it back up. And when they start bringing it back up, Katie, bar the door, because they'll just zoom it right back up again. Everybody that panic sold out sees it's moving back up, and they just come roaring back in again. Now, why does it do that? Because human nature works the same way year after year, decade after decade, century after century, that they panic sell at the bottom. So here's an easy one to watch. So if they take it all the way down to the 200, we're getting into the oversold area. Just watch to see if they start supporting there. If it starts moving back up, you jump in, because you know what your support level is going to be. If it starts supporting here and moving back up, you buy, anticipating it could have a good percentage move. And if it turns around and goes back below the 200, you close it right back out. And let's see, MLNX. Notice the doji sandwich, but also notice you just come from the 45 range down to the 35 range. You could be down to 30 sometime tomorrow and bring it right back up again. NTLS from 21 to 15. Well, I'm just watching this one to see if we have a big, huge percent price move to the downside and then start jumping in. I can't remember, and I don't remember how far back it was. Yeah. Anyways, I can still remember the day a few years back. I don't know. Well, it could be longer than I think, because all the years are blending together now, where the market was selling off. They just took it down hard in the morning. It stopped, and when they took it back up, they just roared back up. They, meaning the market in general. They, the normal investor sentiment. Okay, that's about all I've got for tonight. I know that wasn't very long, but all you need is 3 or 4 or less positions tomorrow. To have some, depending on how they open this market. I don't know where the futures are right now. But when we wake up tomorrow, if the pre-market futures are down big, get ready to start buying before the end of the day. All right, good, Ed. Yeah, so these are some of the best ones. What you really want to see is a big percent price move already, and then you start seeing them get much bigger to the downside. All right, so do we have any questions on candlesticks? When you say they roar it back up, does that start an uptrend, or they just take it back up in the afternoon? Usually it will be for at least a 2 or 3 day bounce, because what will happen is, let's say for example, they open this down and take it down, and then they bring it back up and do a hammer or a piercing signal or something. Everybody sees, man, they reversed it, and they jump in the next day. Then you have to see whether they can continue it or not. Success, usually they don't take it down hard and then go sideways. They're usually going to take it down, and then people see the selling has stopped. They're all, because there's lots of smart money out there waiting for this market to hit bottom, and then they're going to start stepping in. And when they start stepping in, obviously that starts moving things up. And when things start moving up, everybody that's been selling out for the last few days or weeks, they start jumping in also. Evening Star just requires indecisive trading. Doji's your best indecisive, but any other indecisive. What are the markets going to test tomorrow that would bring it back up? Oh, I think the S&P, doesn't it have a target of the 200? The NASDAQ is still too far away, I would think. Here, I mean, this was a 100-point day. That's a huge day in the NASDAQ. So right now we're getting close to a little support level here, and you've got some little support levels over here. What are there any signals and patterns to watch out for? Probably the hammer type signals usually occur when you have big, huge sell-offs like we're experiencing. On a reversal, are you discussing does volume play any role? Not necessarily. Obviously, the volume will be big on a blow-off day because you've got lots of people selling, and then all of a sudden a lot of people buying. So the volume is going to show up as hefty for the day because of a lot of trading going on back and forth. Do you ever use intraday stops and getting killed with intraday stops and close above the T line? That's why you have to, well, if you see here, for example, the prime example, that if they started opening lower and trading down, you close out the position. Then if it turns around and comes back up through the open, you can always buy back. For two reasons, because one, it looks like it's going to close back up above the T-line, and two, when you're buying, it's because the price is moving in that direction. If the price is moving in that direction, that's probably where the momentum is, and you can be buying right back because you can tell it's going to close back up above the T-line. Yes, JJ, they are still working on my editing of it, or editing my work on it, let's put it that way. It should be ready anytime. Now, Pat and Tim just got back from a week conference somewhere, and so they're working on it. James, no, I don't ever trade the VIX. That's a question that you want to put in here probably during the day because there are some people that use the VIX for their trading. If the market is up tomorrow and you're mostly long, should we close some positions? If the market opens higher and starts trading higher, you stay long, but if it comes back down through the open, you close out your long positions. At what point do we decide the market is in a downtrend? John, we knew that ever since the, especially in the Dow, when it failed here at the T-line and then did a little doji gap down below the T-line. So we've been in a downtrend ever since that time. And so that's why when you read, when I put out the morning comments, or the afternoon comments, when you see comments in there that says maintain your long positions that are acting well and add shorts to the portfolio, that means you're probably got you're in a toppy mode and it's time to start shifting the portfolio, your positioning. So again, on a money management basis, if I have 10 positions on, I might have 8 or 9 of them long. Then all of a sudden I close out a couple long positions. I add a couple of short positions. I'm in here. I might be closing out long positions and adding a short position or two. So by this point, I might be 6 long and 4 short. Coming back up and failing. Now I might be 5 and 5 and now 6 and 4. So I'm kind of gone in the direction of what the market's telling me by slowly converting my portfolio. And so as it moves this direction, I'm out more of the longer positions going short. So it's kind of a natural evolution that if you see you're in an overbought condition and you start seeing sell signals in the markets, that's when you start adding short positions to your portfolio that are giving you closes below the T line. And whoops. So we've had a few in here. Again, when the charts are telling you that the individual stock is starting to roll over and the market's starting to roll over, even if you've got some positions on the long side that are still acting well, you have to maintain those positions. But as soon as you start seeing some sell signals or selling confirmation, you close them out and should be adding to your short position. So it's not like you're having to all of a sudden close out all your longs and go short. It's kind of an evolving process. Susie, very simple. If tonight you go through your scans and see which stocks have had the biggest percent move to the downside today, and or which stocks have had the biggest percent move over the past 30 days to the downside, and you just kind of make a watch list of those. And then tomorrow, when the market opens, you're going to have those on your watch list. You can see which ones are moving down the fastest. And if they're down pretty big near the open, you check them to see if they gap down. If they gap down, you flag them again and say, all right, I'm going to watch this, because if they've gapped it down in the oversold condition after a long downtrend, more than likely this is where they're flushing all the longs out, and you want to get ready to start going long once it hits a bottom. Okay. Test the resistance? No, but at this point, we did a doji. Makes it very simple. If it comes back down through today's low, you close out the position, because more than likely it's coming back down to test the T line. If it does that, if it gaps up tomorrow and then starts selling off, if it started opening up and trading up, as soon as it came back down through the open, I'd start closing out any remaining long positions that I have, and or add to some of the short positions. Whoops. For example, JNPR traded up most of the day, but when it came back down through yesterday's close, it was time to go short, because that told you they were taking it down further. Now it's done a doji sandwich setup, which means if it opens lower, you can still short this one, because you still have a gap up kind of island reversal. Not a true island reversal, but you had a hanging man gap down. That told you exactly what you wanted to know at that point. Yes, Scotty's fits into that category also. That see if they take this down and bring it back up. So what I'd be looking at is that kind of hammer signals showing up tomorrow. Okay, all right. Jim, let's go ahead and do the double line. And in 4.3 seconds, let's do the second double line. Okay. BTG. BTG. Oh, I don't know what that is. S. Dot. BTG. Oh, am I doing this right? BTG. That's funky, whatever that is. A Bell 20 index. I better quickly move along before I figure out I don't know what I'm doing. Zynga, you stay long on this one. That big gap up, remember, the bigger the move, the higher the probability there's been a change of investor sentiment. Stay with it. This one, yeah, even though it did a bearish engulfing, it's not in the overbought condition. Your stochastics are still down here. And so I'd give it one more day, but it needs to open positive and trade positive. We've got some strong signals in here, and you didn't close below the T-line. Give it one more day. Yum. This one you stay short until you see a buy signal. And again, this one could be one of the ones where if they gap it down, it's come from 77 down to 66. Watch for a gap down and see if they have a support level right down here. If it starts churning at this area, get ready to start buying. NLNK held up reasonably well. Sold off a little bit, but it stayed above the T-line. So you stay with this as long as it doesn't close below the T-line. And HIMX opened higher, traded off, but closed right at the T-line also. Give this one more day, but it has to open higher and start trading higher. Electronic Arts, stay long. Notice this one, even though it backed off, didn't even close below the T-line, or the 3T line. And AKS, this one closed on the 50. This one, I would have, if with it trading right on the 50, I'd give this one more day, but it also has to trade positive. It opens lower, you close it out immediately. Now you have not only a failure of the T-line, but you've got a bullish engulfing signal that's being confirmed. SLM, S.SLM. Stay short. Another one where you can watch to see if they're gapping it down on panic selling tomorrow. But it's right now you stay short. Now, if you're short some of these and they gap it down, get ready to take profits. And once again, that's where you flip to your 10-minute chart. Venda, this one should have been closed out on the lower open today after that big long-legged doji. Remember, they're going to move it in the direction of how they open it after the doji. VRS, we did. ONVO, this one should have been closed out today. Whenever you see that hammer-type signal telling you the bulls are trying to take control, they better be confirming they've taken control. If they open it lower and trade it down, the bulls have not taken control. MasterCard, oh, that's milk, S.MA. Stay short till you see a buy signal. Hershey, I wouldn't be long or short this one. This one you should have been out because it closed below the T-line. And notice the magnitude of, the lack of magnitude of return on this one. EAT. This one you should be out of. Now you can look to see it go short if it comes down through the 50 tomorrow. And Las Vegas Sands. This one you should have been out of today on a lower open. Whenever you have that indecisive trading smack dab on the T-line, they'll tell you which way they're going to take it on the open, which today they told us number one, you saw the market started selling off. Two, they were trading below the T-line. That told you just get out of the trade. You can always buy back if things turn around. OREX needs to definitely open positive tomorrow. If it opens lower, remember you've got a doji at the end of a flat trading area. If it's going to move in the direction of how they open this one tomorrow. And Live held its head above water a little bit. Stay long until you see a sell signal. At this point, you still use the T-line. And GMed, another one that has to open positive and trade positive. If it does a lower open tomorrow, you close it immediately. Rickshaw, man, haven't seen you around for quite a while. Ford came in with slightly lower earnings. Oops, what's happened here? Ford. Lower sales. I think they were expecting like 7.1%, and they came in at 6.1%. Well, it was the other way. They were expected to be down 6.1%, and they were down 7.1%. So right now, you shouldn't. If you were trading this, you should have been out of it when they gapped it down. On a long-term basis, you're getting toward the bottom of the trend channel. Stochastics in the oversold area. Start watching for a buy if you're looking at it for a longer-term hold. Bull. This one you can stay long as long as it doesn't close below the T line. Notice the double doji today. And this also would have been a perfect example that if they started selling it off and you closed it out, you bought it back when it came back up through the open. Because if it came back up through the open, what type of signal was it going to do? Was it going to do some sort of doji, hammer, or better, which at worst case, it was probably going to close back up above the T line. RNN. This one you stay long as it stays above the T line, but you definitely want to see this open positive tomorrow. We did VRS, AKS, CHK. This one you should be out of for two reasons. One, because it closed below the T line, and two, it's moving sideways, not moving anywhere. SYTR is not one. CYTR. Whoops. CYTR. This one should have been closed out if you were in it. Anytime you see it move up and they gap it down, should have been closed out on Friday. The fact that they opened it at the T line and traded this way told you they weren't going up anymore. They were still selling this one off. Twitter. Stay long as it stays above the T line. Tesla, a bearish engulfing signal closed right on the T line. It's only got one thing it can do tomorrow to stay in it, and that's open positive and trade positive. GLDD, big bullish engulfing signal. If you're buying this one tomorrow, just watch to see what it does once it does get back up to the T line. SDS, the short fund, stay long on this one. I think that's the one you want, SDS. I guess that's all there is. EXA, you can stay long on this one. Just make sure your volume's, oh no, that's a $14 stock. Stay long as it stays above the T line. And MTW, another one that has to open positive and trade positive. If it opens lower, close out the position. You can always buy it back if it sells off and comes back up through the open. IPCI, this one's got a nice little action to it. It also has to open higher and trade higher to stay in it. See, we did VRS, HIS, ZLCS. That one you should be out of. You shouldn't have been in this one for a while. You could be, if you were short, you stay short. And Facebook. Stay long as it, at this point, I would use the lows right here. Shouldn't trade back below there. Right now, you should be in a 45 degree. Let's see, Angie's List. Another one where you just stay long until you see a sell signal. At this point, use the T line as your stop. And Apple. Apple, if you're short, you stay short. Tomorrow will be decisive. If it opens positive, you've got the potential of a doji sandwich. I'd close it out, or at least half the position if I was short, and the other half if it came up through today's high. TNA still looks like it's heading to the 200. TSIQ, looks like all the solars were getting hit. This one you shouldn't be in anymore. Again, with the close back below the T-line. If you didn't close out then and needed to open positive and trade positive, then very simply you put your stop where it closed on Friday. If it came back down through there, tells you which direction they were going. And Kerr, this one you shouldn't be in. It needed to open positive today and trade positive to stay in it. As you can see, a bearish engulfing. This should have been closed out. LinkedIn. LinkedIn, I wouldn't be long or short this one just because of the lack of magnitude of move, and it's moving slowly down sideways. There's better things to trade. Pran, we closed out today because it did start trading lower. Now, it can still be bought if it opens positive, because notice where it came to. Back down to the T-line. So you want to keep an eye on Pran, that if it opens positive tomorrow, you can still be a buyer of it. And notice where it came from. This little scoop cradle pattern, doji sandwich. I mean, you've got all the clues in here of why this was moving higher. CarMax. CarMax you can be buying, but it has to be a positive open. And then just use today's open as your stop. XIV. Stay short. I would suspect this little gap right here is going to be filled. NetSuite, big bullish engulfing signal confirmed today. You can short this one if it opens lower tomorrow, coming down through the 50. That tells you there's no support. Valero failed from getting to new highs, and this told you which way they were taking it after a doji. It needed to open positive and trade positive. The fact that they could bring it back down through the low and the T-line told you probably time to be out of this one. Q. You don't. Oh, is it that time of night? Shadow spots. There we go. The bigger the signal, the higher the probability the sellers are in control. This one you stay short. SRPT, I think that's what you want. This one, the slow curve to the downside, you should be short this one. It had the pop, but when they closed it more than halfway down this candle and below the T-line, that told you that pop wasn't working. Bidu, stay short till you see a buy signal. NQ. NQ is going to be a very slow at best trend channel. As long as it stays above the T-line, you can stay with it. If this opened lower tomorrow after the dark cloud, that means they're probably bringing it back down to the moving averages. You want to close out the position. Let's see. Yum had earnings. All right. Oh, Yum is around 69. All right. So if this is going to be a kicker type signal, you could be buying this one. The first target is right here, which is right where they would be filling the gap, and then see what it does from there. Yeah, Apple, but you still don't have anything that shows there's any great buyers yet. Now you use the term yet on Apple. NVAX stays short until you see a buy signal. You're you're heading to the 50. Danik, if I say stay short, it's probably mean you don't want to be shorting now. If you're short, you stay short. I try to qualify them by saying I wouldn't be shorting this right. Wouldn't be afraid to be shorting it here. But if I say stay short, that means I wouldn't be shorting it here. But if I was short, I'd stay in it. NIHD, you can continue to hold this one as long as it stays above the T line because you got a big fry pan bottom in progress. FLT, another one that's failed. It's more than likely coming back to the at least the 200. If it doesn't hold up in the 200, you're going to have this type of price move as this move right here. And PetSmart stay short. Came back up and they gapped it down. Tells me wave 1, wave 2, wave 3, potentially down into this area, which is somewhere around the 55 range. Let's see, MDVN. There's a doji sandwich down through the T line. This one's heading down to the 50. Because the 100 SMA doesn't really do a whole heck of a lot. Somebody was asking why don't we comment on the 100 SMA. The 100 SMA isn't a high followed indicator. NVAX. Oh, we did this one. Stay short. K. Stay short. This is another one that if they gap this one down hard, start looking for a reversal. SH. Oh, that's soybeans. S.SH. Nice little rounding bottom on this one. This one you stay long as you stay above the T line. Is that a symbol? Let's see. I'll try it. Apparently not. CELG has a long-term hold. Yeah, probably as long as it doesn't close back below the 200. If it does, that means now you're in a downtrend. Okay, Don, yes, tomorrow. Let's see. FFIV. Oh boy. FFIV. Yes, you short this one on a weaker open tomorrow, your doji sandwich down through the T line. Probably your first target is right here, filling this gap. And Visa, you stay short till you see a buy signal. OKE, kicker signal to the downside. Anticipate the 200-day moving average being your next target. And GPC, this is one that if they gap this down and trade it lower, get ready to buy because they'll probably snap it back up a little bit. Okay, and Q. All right, see you at TEAR. Oh man, oh man, oh man. TEAR. Maybe I'm typing too quick. See, we did HGG, S.HGG. Yes, if this one gaps down, get ready to be a buyer. TEAR, same scenario, especially with these that have had big drops and are in the oversold area. ESI, S.ESI. Notice how far away you are from the T line. If they sell this one off hard, get ready to buy it. And EDMC. Same scenario. If they gap this down, be ready to buy. That's coming from Ed's PCFs. Another good feature about a chat room where everybody's kind of looking for the same thing is you got people like Ed C on here that can write formulas very well. So if you need a formula or like to see what formulas he's working with, this is the place to converse about it. PBRY, looks like they failed at the 200. Good possibility they're coming back to the 50. Will you go over the logic behind a 10-minute chart versus other times like 5 or 15? Malcolm, just the 10-minute chart seems to work for me as a bellwether chart. That if the 10-minute chart seems, and that's not any more scientific than through the years, they've always seemed to work. That when the 10-minute starts showing that it's time to buy, then I flip down to the 5-minute and the 1-minute to make sure it's confirming. Okay. When do you buy a rounding bottom? Do you have to see a buy signal or does it have to reach a certain level? If you're buying a rounding bottom in this market, it better be right now at the breakout level. Otherwise, with the market heading lower, I wouldn't wait. I would wait on any rounding bottom until it confirmed a breakout. Okay, with that, let's call it a night. So we did it all in 1 hour. That's unusual. All right, tomorrow we'll be in early, seeing what the pre-market futures are doing and which way we need to be going. So with that, everybody have a good evening. We'll see you, everybody, bright and early tomorrow.